Welcome, Anders. I hope that you had a nice summer with some good vacation.
Absolutely, it was warm and sunny.
Fantastic. Lots has happened during the summer that leads us into some interesting developments now, and we'd like to get your take on that. If we start with, we see inflation coming down, and we have key central banks cutting or looking to cut rates further. We just had now the Swedish Riksbanks decreasing the rate with 25 basis points. What are your thoughts around that and looking forward?
Well, I think the Riksbank took the right decision. The Swedish economy needs support from rate cuts. Unemployment is fairly high, demand is soft, and inflation has come down. I think we can be fairly optimistic on inflation in Sweden, given that wages are under control and productivity is coming back when the export sector starts to expand. So I think we should expect actually Swedish rates to be below 3% at the end of the year. They will continue to cut, and I think it would be motivated even to do a 50 bips cut from the Riksbank side.
We have ECB and the Fed coming. We have Jackson Hole starting a little later this week. What do you see will be said there?
Well, I think Powell on Friday will reiterate his stance. Fed is feeling more and more confidence with inflation coming down. The US have had a labor market that is slightly softer. It's not a really big problem because employment is growing, real wages are growing, and also we can clearly see that unemployment, even if it's come up a bit, is from an historical perspective low. So Fed, I think, will signal that this will be a first rate cut in September and that they will continue to cut. I think ECB are basically in the same position, but for different reasons. We've seen the German economy slow down. We see that manufacturing production all around Europe is fairly weak. So soft demand is a strong argument for lower inflation in Europe, and therefore I think ECB will cut rates also in September. So September, October, November, December will be rate cutting months.
Okay, and if thinking about what that means for the current market environment as we enter the fall, how strong are the economies in the US and Europe?
Well, we had a bit of turmoil in the beginning of August. We've basically taken almost all of that back. There was a discussion on recession. I don't believe that the recession risk is that big. US, China are doing fairly well, so global demand is there. Europe is weak, but not weak enough to cause a recession. So, yeah, I think the market will see a bit of support from lower interest rates. We are not seeing a really strong recovery. So I don't think that there is a big risk that inflation picks up and central banks will be deterred from cutting rates. So rate cuts, a bit of support from long bond yields, and global recovery, I think, will kind of give a good backdrop to the markets.
Okay. If we think about Sweden then and small, large cap companies here during the fall, should investors be concerned?
Well, small caps have been hammered a bit during the last few years, but from a longer term perspective, we know that small caps are outperforming. There is a liquidity premium, there is a risk premium that normally delivers higher return. I know that our portfolio managers have seen the correction as a good point to increase their positions. We have some really good companies like Bone Support that we believe can have a fairly good ride. So for long-term investors, I strongly argue that you should have a position in small and mid cap companies because you in the longer run get a better return.
If we think about emerging markets then, with all of the geopolitical risks, we have the election coming up in the US this fall. What do you see? We have seen great growth in India. We have continued difficulties in China. Are emerging markets poised to gain ground?
Well, growth is much stronger in Asia. Inflation has never come up to the high levels that we've seen in advanced countries. China has very low inflation and the price increases are well under control in India. So I do think that there is a bit of support for Asia. And even if China is slowing, I mean, we at 4 or 5% growth, they're adding a a Swedish economy or 2 Finnish economies every year. So it remains a very important market. I think it's very important to be cautious when it comes to valuation. So you get in on an entry point that in companies that are not so exposed to geopolitical turmoil. We should also note that China over the last 2 or 3 years have really redirected their exports, much less exposed to the US than 4 or 5 years ago, and diversified out to the rest of Asia, but also Eurasia, Latin America, and Africa. So yeah, obviously, if we get Trump, there could be a bit of turmoil, but normally after the US presidential election, we see the stock market recover. If Fed is cutting rates, that puts a little bit less pressure on emerging market currencies. So yeah, I think it's a good point to invest in emerging markets.
Great. Well, we have a lot of exciting things happening this fall, so we have a chance for more updates coming soon.
Thank you very much, Jessica.